Welcome, everybody. I am so excited to have a guest here today. His name is Andrew Schwartz from Schwartz and Schwartz Accounting out of Woburn, Mass. Can we hear you say it? Because you're
how to say Woburn? Out of Woburn, Mass. Yeah.
Woburn.
Woburn.
You got to be from Mass to say the name of that town. Trust me. But honestly, Andrew's here to share his over 25 years experience as a CPA, particularly in the dental field. What I appreciate is he's had all these years working. He is at least 250, if not more, practices right now. So I so appreciated being able to go to him this year. I don't know about you, but this year has been whiplash, back and forth. So doctors are wondering, man, I'm being told to take this loan. I'm being told to do this. I'm being told. No sooner do they do that, the guidelines changed on them. So I am so happy not to be the accountant. So we just need to hear from you, Andrew. What in the world are dental owners supposed to be doing right now?
Yeah, definitely a crazy year. The rules did change a lot. It seems that the rules now are pretty much in place. So what's in place now, I feel these are the rules we're going to be living with, and the rules we're going to try to understand and help our clients take full advantage of to be able to recoup some of the losses that occurred early in 2020. And today we're going to focus on the Employee Retention Tax Credit, the ERTC. And this thing changed a bunch of times, and we're going to go over what the current set of rules are.
Okay.
You want to get right into it?
Yeah, please.
Okay. So the Employee Retention Tax Credit. So for the longest time, ever since the CARES Act was passed at the end of March, until December 27th, actually, when Trump signed another stimulus package into law, anybody who applied and received, anybody who received the PPP loan wasn't eligible to claim the Employee Retention Tax Credit. Well, that all changed when he signed that bill into law on December 27th. And unbeknownst to a lot of people who were following it, all of a sudden, businesses that received the PPP loan could also qualify for the Employee Retention Tax Credit and apply to get the full amount back as a very valuable payroll tax credit. And we're going to go over those rules.
So the employee tax credit means they're going to get something for each employee on the payroll that they kept on?
Yes. Yeah. For the Employee Retention Tax Credit is a credit to business owners for retaining their staff. And we'll go over the rules. The rules for 2020 are different from the rules for 2021. And the rules for 2021 changed again when Biden's stimulus package was signed into law a few months ago in March. But as I said, what we have now, I think, is the rules that we'll all be living with.
All right. Well, let us know, because we're tired of the changing guidelines. I want to know that we have some sure footing here.
Yes. Tired of the changing guidelines, that's for sure. During the winter, we actually, the CARES Act came out at the end of March. We sent out a Monday morning newsletter to our clients every Monday, and we never had a search for information to send out. The rules changed daily. It was really tough, but I think we're past that. Okay. So, and then there's more good news, by the way.
Well, finally, I want to hear that.
So what happens is if you got the PPP loan, at some point you need to apply with your lender before PPP for the forgiveness of the PPP loan. And the due date to apply for the forgiveness is it's 10 months after the end of the 24-week covered period after you get the loan. So it's the day you get the loan plus 24 weeks plus 10 months. So for most people, you're looking at the end of July or maybe August to submit that paperwork for the loan forgiveness with your lender. So when
this year, they still have that window.
Yes, they have to the end of July, and the lenders are on top of it, because the lenders want the forgiveness to go through so they can get these loans off their balance sheet so they can lend money to other people. So the banks have their own lending restrictions.
Nice.
So what happened was the employee retention tax credit is based on payroll dollars that a practice pays. And the PPP loan forgiveness is based on payroll dollars that a practice pays. So you can't have the same payroll dollars go for both purposes.
Yeah.
Now, the PPP loan forgiveness, you can also use your facility costs like rent and utilities and certain other things as part of the loan forgiveness calculation. So when this rule came out at the end of December, some people already submitted for their loan forgiveness. And to make it easier, they didn't bother submitting any of the paperwork for their rent and their utilities. They just gave their lender the payroll costs. And they said, just use this, it's easier. But in theory, if all those payroll costs went to support the loan forgiveness, and it's not available for the employee retention tax credit. The point I'm trying to make is when the government put these rules in place, they were basically very generous. They said, no matter how you filled out your PPP paperwork, when it comes time for you to claim your employee retention tax credit, make the calculations as if you submitted the PPP paperwork in the most advantageous way for yourself.
Oh, what a relief.
Yeah,
what a relief, because I heard rumblings of that. I already did this.
Right.
I did it wrong. So that is good news. That's really good news.
I got to give the government credit with this whole thing. Anytime that there was any confusion or uncertainty, or there was ways to handle it, which would benefit some over others, they changed the rules so everybody benefited equally. And here's an example of that. So they really were very, very fair with all this stuff. So we'll see. So let's get right into it. And here's the basics for 2020.
Okay.
All right. So originally, when the CARES Act came out, they only had the ERTC was only valid until the end of 2020. They weren't even talking about anything for 2021. And the credit for 2020 for a retained employee, the maximum credit is $5,000 per employee for the whole year. I guess we'll get to that in a minute. To qualify, your practice had to be closed by government order, which is pretty much every dental practice.
We're correct.
Yeah, or your practice revenue in a calendar quarter had to fall by more than 50% from the same calendar quarter in 2019. So pretty much all of our clients that we work with qualify based on the fact that they were closed. Some oral surgeons actually didn't. They stayed open the whole time. But besides that practice, everybody was either closed and they saw their revenue go down by 50%. So they qualified by both criteria.
Interesting. So if anybody's listening to this and they're not sure that their accountant did this properly, can they reach out? Can you talk with them and see if they?
Sure. Yeah. My contact information will be at the end.
Good.
But if they were closed, they qualify. And I think every state, I know Massachusetts, they closed.
We were really closed hard here in New York too. So
yeah, they closed. And then you continue to qualify until the first day of the quarter, following the quarter that the collections exceed 80% of the collections for the same period of 2019.
That
so
makes
most of our there's a lot of information. So most of our clients, their July through September was very, very busy. And most of them, their collections for that quarter were probably close to even to what they were the same quarter of 2019. So for most practices, the ERTC is going to be valid from the time they reopen until September 30th.
Fascinating. So they've got help while they're closed, and then this is in effect.
Yeah. So it goes all to the end of the quarter. So you can use the wages paid until September 30th. Most people, if it took a while to ramp up and your July through September quarter wasn't so hot, then maybe you'll qualify for the ERTC all the way to the end of the year.
I know a lot of them were working reduced capacity, so I'm sure that
I know, but from what we saw, most practices were very, very busy. I feel that come the summer months, the COVID cases were decreasing. People wanted to do something that was normal and safe, and going to the dentist was one of those things. You didn't really hear anything about any outbreaks starting at a dental office.
Yeah, this is true.
You had to go. People had to go. They wanted to go, and they loved going. And it was, because there wasn't that much to do. You couldn't go to an amusement park. You couldn't go to the mall.
This is how we've come.
Yeah, you had to go to the dentist. But the dentists were very busy. And most of our clients, this is anecdotal, but most of them, by that quarter, they were back to where they were the year before. And I know it was tougher work. There was more protective gear. They had to space out the patients more, but the demand was there, and a lot of them treated the demand.
Yeah, fascinating. It was a good side note to offices. Look, you could be taking more vacation and still hitting these numbers.
Yeah. Okay, so to the last sentence here. So most practices were closed during the second quarter of 2020. They had a good third quarter. So pretty much every practice should be looking at the ERTC at least for wages paid through September 30th.
Nice. That's better than I thought.
Yeah.
Okay.
Okay, and then the maximum, it's a payroll tax credit. So it doesn't show up on your S corp tax return. It doesn't show up on your personal tax return. You need to do this in connection with refiling your payroll tax form, a corrected 941 form is what it's called. And the credit is 50% of the first $10,000 of wages paid per employee for the calendar year. So
Okay.
yeah, just do the math.
Yeah.
Okay, so that's nice and easy. So the max for 2020 is 5,000 times the number of employees.
Nice.
Well, you pay at least $10,000.
Yeah.
Okay, so now let's look at 2021. So 2020 is pretty easy, straightforward. So for 2021, okay, you guys sitting down? The maximum credit, instead of 5,000 per employee, it's 28,000 per employee, up to 28,000. Okay,
Are you
so
seeing people actually get this?
we just finished the May 17th deadline. We're starting our ERTC soon. I'm not sure, because we're really going to have to see who's eligible. Let's talk about that for a second. So originally, in December, they extended the ERTC through the first 2 quarters of 2021, and then Biden and his subsidy bill, he extended it to the end of 2021. So the payroll tax credit is now extended through December 31st. Okay, to qualify, instead of your revenue going down by 50% in a quarter, as compared to the same quarter in 2019, it only needs to go down by 20%. Okay, so if your revenue one quarter is 80% or less of the same quarter in 2019, then you qualify for the ERTC for that quarter. And then there's this rule: if you qualify one quarter, you automatically qualify for the next quarter. So if you're down by 80% in one quarter, then you actually can get the credit for
It's a little cushion there.
subsequent quarters. What?
That's a nice cushion.
Yeah.
You know.
And then the amount of the credit, instead of being 50% of the first $10,000 paid during the year, it's 70% of the first $10,000 paid each quarter.
Wow, that's where they get the 28K.
Yeah. Yeah, that's where they get the 28K. So 7,000 per employee times 4. So anybody whose practice dipped by more than 20% in the quarter will at least get $14,000 per employee in this employee.
Wow, I really not sure some of my practice owners know this. I really want to go back to them and say, hey, go relook at this. What if they already filed?
Oh, well, our clients already filed too, and we'll talk about how you get the money back. But
okay,
your payroll company or whoever handles your payroll has to help you first. It's actually going to be a lot of work, but we're going to help everybody figure that out. And then it has to be coordinated with the PPP loan forgiveness too. So there's a lot of moving parts, and
that's why we have our accountants.
Yeah, and the good news is you do the best you can. The IRS, they do not have the manpower to start reviewing all these very carefully. You want to get it right, but you get it, as close as you can. All right, so 28,000 per employee, max of 2021. Okay, so how quickly do you need to file for the ERTC? So a lot of the subsidies that came in, you really had to file very quickly. The PPP, people were trying to file the first Monday, April 4th or April 5th, whatever that was, because funds were limited. Then there was some other deadlines set up as they kept providing more funds for the PPP. A lot of the dentists, probably most of the dentists, applied for the HHS Provide Relief Funds. Well, those had very quick deadlines from the time they announced that dentists could apply to when they could apply. So it was a huge race. The ERTC, the way to get that that valuable payroll tax credit back is by revising your quarterly payroll tax form, the Form 941. And the deadline to revise a tax return is 3 years.
Okay.
So you see,
That's a relief. That is such a relief.
such a relief. But you still want to do it quickly because you want to get the money. But
Right.
but it's not like these other opportunities where you really had a rush to do it, or you either you missed the deadline or they ran out of funds.
Right. Interesting.
But this is a 941 is a payroll tax form, and it is whoever helps you with your payroll would be the ones who will do that. But there's more complications, which we'll talk about in a second. Okay, but first, let's talk about this. So then, as part of the Biden subsidy that he came up with, that he signed into law, I guess it was March 11th, people didn't see this one coming either. It's this new thing called the Recovery Startup Business. And from what I read, it's any business that opened after February 15, 2020, they're eligible for this employee retention tax credit, and they don't need any decrease in employee costs. Wait, they don't need any decrease in revenue, is what they don't.
Whoa.
So you don't have to look back to 2019 because they weren't open in 2019. But they can get the employee retention tax credit equal to 70% of the first $10,000 they pay to each staff member, which I didn't put on here, capped at $50,000 per quarter. So a business that has more than 7 or 8 employees, the government is going to pay $50,000 per quarter through one of these tax credits. And again, it's called the Recovery Startup Business. Oh, here it is. I did put a slide in for that. Okay, so it's at the $50,000 per quarter, quarter 3 and quarter 4. So it's only available for quarter 3 and quarter 4. So if you're a startup business, you don't have to worry about quarter 1 and quarter 2 of 2021. It doesn't impact you. You're going to have no decrease from 2019 because you weren't open.
Right.
And it's equal to 70% of the first 10,000 paid to each employee. And unlike established businesses, you don't need to show a decrease in revenue. And I think from what I read of people who articles and stuff of people who were talking about this new tax credit for new businesses, there's going to be a checkbox on the 941 form. So this one, you don't want to amend the 941 later. You want to do the 941 right the first time.
Yeah.
And there should be a checkbox saying, I'm a new startup business. I qualify for my nice ERTC and I want my money. What was that movie? Show me the money.
Show me the money.
Oh, I actually never saw that movie.
You need to see it.
Have you seen it?
I have. It's been a while.
My wife doesn't like Tom Cruise, and I think we were dating when.
What? Nobody can not like.
You believe that? Sorry, Tom. All right. All right. Anyways,
I'm sure he's going to be watching my newsletters, videos.
ERTC, here's a production company. Maybe he has a new one. Okay. ERTC Pitfall. So there are some things to worry about. First is, and this is a big one. So basically, there's all these tax credits. There's employee tax credits out there that have been out there for years. And the rule is, if you take an employee tax credit, you need to reduce the deduction you claim for those wages by the amount of the credit. So but usually you're taking the credit real time. In this case, we're taking the credit the following year. So in theory, everybody who takes the employee retention tax credit is then going to need to amend their business tax returns. And most people have S corps or scheduled or sole proprietorships or partnerships. Then they're going to need to amend their individual tax returns. I'm still keeping my fingers crossed that the government's going to ease up this restriction.
That is messy for me. That one goes over my head. I'll leave that in your park.
Oh, so basically, if you go and you take the credit, you get to if you filed your tax returns for 2020, you need to redo them all. The IRS doesn't have the manpower to start reviewing all these amended tax returns. I'm hoping that they just say, just pick this up as a 2021 item on your business tax return.
Yeah,
okay,
that would be good.
A second thing for the ERTC, the business owner's wages count, but no other family members count. So, so if you employ your spouse and your kids, those wages wouldn't count for the ERTC. And if you're self-employed, the money, your earnings from your practice don't count towards the ERTC. So if you file a Schedule C or a partnership and you get paid guaranteed payments, you wouldn't qualify. So there are some things to be aware of. So there's a few restrictions.
Right. Okay.
Okay, so,
Yeah. Still
and
there?
and that's it. So that's the
Wow.
ERTC in 10 minutes. I don't know if we did it in 10 minutes, but
I think it was pretty darn close. Well, that is a lot of information. I am happy you study it because I have no interest in knowing that. I just want to know who to go to. That's all I care about. What were you going
Right.
to say?
Oh, so we have a blog out there. All the articles we've been posting this past year and a half or however long it's been is schwartzaccountants.com, our blog and news. And just search, you can search on ERTC and I think there's 5 or 6 articles that we wrote about the ERTC. You can search on PPP, you can search on the Provider Relief Fund, you can search on the EIDL loans, all the different topics that you have questions about and you just not
Right on
certain
your
about.
site.
We have a blog post and the blog posts all include links back to the SBA site and other places. And we just try to help everybody stay on top of this as best we can.
Well, I appreciate the interpretation because
Okay.
out there on your own trying to read all these articles, forget
Ugh.
it. I just want you to interpret it for us. Tell them that they do it right. And what I heard through your slides is there's room to do plenty of corrections and
Yeah.
getting it close, even if we didn't when we were listening to the old news. But this is actually exciting. For once, talking to an accountant's exciting.
I'm moving. Okay. Very exciting. Yeah, but this is good. And it's not that bad. And the government, they did what they had to do to save the economy. And part of it was to get money into the hands of small businesses. And with these programs, they're more interested in getting the money in the hands of the eligible small businesses than it being correct to the penny. They know that the rules were fluid and complex. So, but they know that the businesses needed money to survive. So that's why they set all this stuff up.
Wow, gosh, thank you for so much for making it clear and giving us hope and being a good resource. So I am so appreciative. All you owners, I have heard from a lot of owners and I haven't heard them say that they took advantage of all of these. So I'm going to get this message out quickly to everybody. And I encourage everyone to reach out to Andrew. I'm sorry he doesn't like Tom Cruise, but I didn't vet him very well before I brought him on.
How did you? Who asked somebody whether or not? Like, who asked someone during whether trying to present on this whether or not they like Tom Cruise? It's just such a random question.
I guess I got to add that to my questionnaire when I vet people.
Yeah, I'm just kidding.
No. Well, thank you. Thank you so much. I appreciate this. Thank you. Appreciate it.
Thank you.